9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories today. South Korea, very much in focus today, leading losses across the region here after the government said it's planning measures on leveraged ETFs. Now, expansion plans by China's CXMT also adding to these worries that SK Hynix and Samsung will soon face stiffer competition.
Data center components maker Innolight gets regulatory approval for what's likely to be Hong Kong's biggest listing in years.
Also ahead in the program, China greenlights Apple's plan to roll out AI services in China with the help of Alibaba and Baidu. We'll be watching those stocks at the bottom of the hour.
And the banks trimming their China economic growth forecast after disappointing GDP numbers. Credit data for the first half also falling short of projections. Yeah, we are awaiting, of course, the F4 we've been talking about.
Yes.
Of Korea,
not
right?
That version.
Not the one you're thinking about if you're a millennial like us, because
Yes.
I immediately think Meteor Garden, but I'm thinking now Korea. The four financial, I guess, heads, regulators that are being talking about. There's reports about announcing measures on single stock leverage ETFs, which really has been sparking a lot of the volatility in Korea as well. So certainly a lot here on the back of the BOK raising rates, which really is a bit of a side story now.
Yeah, and I wonder whether the stock market has become one of the things that the Korea needs to look at in as far as, so, we talk about the BOK a lot in as far as household leverage is concerned, right? And I wonder whether stock market leverage is something that they should also consider at this point in time, given the features of that conversation there, right? And when you look at, for one, this is the VKOSPI index, right? It's getting really crazy there in Korea. 30-day actual vol is not actually the highest ever. Anyway, that's just context and the backdrop against this backdrop of just this crazy moves we're seeing in that market currently.
I think you add the concerns, or at least what we could be hearing on terms of what regulators are thinking about taming this volatility. You add that to concerns about what we're seeing around CXMT, right?
Yes.
This upcoming IPO, we're getting a little bit more details on, the date and the like. But there is some news and reports of them planning to boost capacity by as much as 2/3 by 2028 in some respects. So that certainly in some ways leads to questions about this whole scarcity sort of issue with these memory chip makers, which could really mean maybe a really viable sort of contender to the likes of Samsung, SK Hynix, and Micron.
It's not going to be a shortness forever, right?
Yeah.
And you have SK Hynix, obviously, to your point, raising a lot of money. Reports about Samsung also wanting to do the same in the U.S.
Yes.
Micron announcing the same thing in the U.S. And then you have CXMT, right? So, markets look ahead. How much ahead do markets look when you look at some of these PEs, for example? It's understandable. And by the way, on that note, right, TSMC also reports today.
Yes.
So that's also something to consider when you look at the AI trade. 1.7% on the Asia Pacific benchmark. Keep in mind as well, we were up 2% yesterday, which was the best day in about a month or so. So understandable, you are getting some money being taken off the table right now. It's also worth mentioning underneath all of this is Iran is still brewing, and I think oil prices are up for a fifth day on Brent. So just something to consider. When we go into the Chinese market today, lots of individual stock moves to track: XPeng, Alibaba, Apple suppliers, what have you. ZTE is also going to be very much in focus there. So we'll do a proper preview of the individual stocks we're tracking going into the open today. But yes, why don't we start things off with Korea? Central bank decision there, and possibly more measures around these leverage ETFs.
Yeah, we could be seeing some sort of announcement soon, possibly here, over the controversy over these leverage ETFs have been tied to the likes of Samsung, tied to the likes of SK Hynix. Let's bring in our managing editor for Asia Equities, Lanting Tu. She joins us with the latest here. So we're counting down to this meeting of F4, right? The Korean regulator is under pressure to really rein in these leverage ETFs. What measures are on the table, Lanting, and how serious has this issue become?
Yeah, it does look to become a very serious matter for the regulators. The most likely measures are relatively targeted rather than outright bans. Industry groups and brokers in Korea are already discussing raising minimum deposit required to trade these products. For example, they're also talking about spreading, rebalancing trades throughout the day instead of concentrating them near the close. They also talked about strengthening the role of liquidity providers to reduce market disruption. What is really notable here today is that this has really evolved beyond a market structure debate, and it's now a political issue. Opposition lawmakers have publicly called for these products to be delisted, arguing that they are exacerbating volatility in stocks that have become central to Korea's AI-driven rally. And President Lee yesterday acknowledged that the Korean stock market has become increasingly unstable. So political pressure means that regulators are increasingly expected to be seen doing something, even if they may fall short of the most aggressive interventions.
Now, Lianting, if they do tighten rules around this specific product pool, what is your team looking at as far as potential market impact?
Yeah, I think in the near term, it could reduce some of the extreme volatility that has been seen in Samsung and particularly SK Hynix. These ETFs require daily rebalancing trades that can amount to hundreds of billions, if not trillions of won, creating a very powerful end-of-day flow that many investors think are amplifying market moves. So tighter rules could dampen those mechanical swings and make trading a little bit more orderly. The bigger question is whether it affects the broader AI trade. These products, of course, amplifying swings, but they also have become a major source of liquidity and speculative demand for Korean chip makers. So any reduction in activity could remove a tailwind for these stocks. That said, of course, the long-term direction of Samsung and SK Hynix will still be very much driven primarily by, fundamentals like earnings and memory chip demand rather than the ETF flows alone.
Lianting, thank you so much. Lianting Tu, our managing editor for Asian equities there. Here with us on set is John Woods, Asia CIO and head of investment solutions, Asia at Lombard Odier. Very nice to see you.
Thank you.
I think we got to talk about Korea.
Yep.
What's the advice?
Well, I mean, I've long been concerned about this sort of speculative frenzy in the retail sector in South Korea. I guess we all have. When markets are up 100% year to date, as it has been, at moments, there is cause for concern. I think the macro-prudential measures taken by BOK are correct. I do get concerned when I see excess leverage in any market. It tends not to end well as a general rule, and I think these measures to reduce the level of speculation, particularly in the retail sector and particularly amongst leveraged ETFs, is the correct thing.
You still favor Korea, though. So is the advice still to kind of buy on dips and still kind of wait for some sort of tightening of these sort of leveraged ETF products? What sort of the...
We're long-term investors,
okay.
Not short-term tactical players. And yes, I think the underlying story driving South Korea, as we all know, is the appropriate one. Yeah. Same with Taiwan as well, same with what I call New China as well. So this is a play on, a leveraged play, I should say, on AI, on renewables, on the online ecosystem, and in particular the memory and chip space. And I don't think that'll change anytime soon. We are overweight and favour that trade. But the volatility that accompanies that preferred status is somewhat difficult to absorb, particularly when you are managing a classic DPM portfolio and you're seeing these pretty extreme swings. Yeah. It's not something that we particularly welcome.
There's also the question of how you play Korea now and where you play Korea. What do you think is the answer to those questions?
Well, I mean, we are playing it through country indices. We're playing it through sector indices. In our minds, that is the most appropriate way of doing it. Actually, more broadly, it's an overweight in emerging markets that we've had for 6 to 9 months. I appreciate lumping South Korea and Taiwan into emerging markets.
That's a whole other debate.
It's a whole other discussion. Sir, But however, it is, right or wrong, it is part of that complex. And so we largely play through liquid ETFs or UCITS funds that particular geography.
There's been a lot of debate about this new I guess, IPO coming up in China, CXMT, and how this could in some ways roil the semiconductor trade, given the fact that they're talking about expanding capacity. How do you look at, these potential players that could disrupt the oligopoly, so to speak, within, the memory, chip trade and memory side of things?
I mean, broadly speaking, we welcome disruption.
Okay.
We welcome the opportunity for new entrants to come in and shake up the market, absolutely. As I say, New China is really quite prolific in this space, and I don't see it ending. We seem to have a new entrant every quarter or so. And it just adds to the momentum behind, as I say, the tech, the AI, the renewables, the green energy space, which is driving that part of the economy. It is eminently investable in our minds. But it's important to caution that it's probably only 15 to 20% of the economy. There's perhaps a more constrained landscape out there, which is a little more challenged, as we saw from the China numbers published a couple of yesterday. But overall, as I say, we still see ample opportunity in the new entrant space.
So the new China is, how would you play that? Is that more an onshore play now because the hardware is there, or is it the monetization plays that you get offshore, like Hong Kong?
Yes, both to an extent. We see a lot more tech in the MSCI China index, so that is much more of a new China way of playing it, and absolutely the same in the H-share market as well. But there are onshore opportunities as well, maybe single line or some index exposure. The CSI 300 has a number of important participants and constituents. But I think you have to be reasonably selective and discreet about the way that you play this, because there's not one size fits all, David, as you know, and the market isn't bifurcated in such a convenient way.
Yeah, you mentioned balanced exposure across onshore and offshore. I mean, the offshore side of things has not quite played out maybe much of this year. What could kind of change that sort of narrative, you think?
We've been in a funk here.
I mean, because people are still questioning the monetization of AI for some of these mega big tech names.
The names, the themes, the sectors we track are up 25% year to date. The broad indices are flat, maybe up 2% or so. It's not a compelling buy and hold index story. I guess you might say it's more of a sector picker or stock pickers market, which is where the diamonds in the rough, if you will, or the opportunities are likely to be found. Whether that's onshore or offshore is really down to the skill of the sector picker or the stock picker. But as I say, it's much more of a discerning market now, I think, than a simple buy and hold directional trade that it was maybe in previous years.
So we talked about EM equities. Is this still massively an EM equity play? Have we missed out on any opportunities? I mean, AI has obviously crowded out mind space completely almost.
Well, I mean, the EM story for us is more a function of South Korea, it's Taiwan, to an extent it's South Korea and Brazil on value. That's how the preferred country status is being communicated. I mean, it's one about valuations, it's one about underlying macro growth, the likelihood that certain central banks will remain on hold, higher for longer, meaning it's supportive of a carry trade from a currency perspective rather than the low yielders. So overall, this play has outperformed developed markets year to date. And it's one that we will hold over into the second half of the year as well.
And is that carry trade still the yen? That's the most favorable play?
Well, there's a number of candidates.
How would we fund this?
Well, I mean, the Swiss franc is obviously a classic example as well. So is the Hong Kong dollar on a relative basis with the US, and of course the yen as well, and the yen even more so given options pricing. Suggesting that it's likely to tick a little higher. But yeah, the overall carry trade, I think, favours these high yielding currencies, and predominantly that they tend to sit in the emerging market complex. And so, yeah, I feel that from a currency perspective, with central banks higher for longer, it's likely to pay dividends.
Just quickly, do I need to worry about oil prices and or the Fed raising interest rates?
Look, I think it's an important point, David. I think what we're likely to see now is something along the lines of a semi-permanent, periodic disruption in the supply of oil through the Straits of Hormuz, and it's one that the market will have to come to terms with. It's a manageable outcome. I don't think we're looking at a benign de-escalation anymore. It's more likely we will see, as I say, these periods of disruption, and markets will just essentially have to price it in, maybe a small $5 to $15 premium on Brent as the new normal. It's a sort of a muddling through scenario. And by the way, the market's already demonstrated quite clearly that it can accept and absorb these shocks through their subsequent price appreciation. So it's interesting that at the beginning of the crisis, when we saw the Straits of Hormuz threatened, there was a quite extraordinary collapse in sentiment and pricing. Markets now seem to have accepted and absorbed this process, and it's a new normal for us.
John, it's great to have you.
Fantastic.
John Woods, Asia CIO and Head of Investment Solutions Asia at Lombard Odier. Up next, TSMC set to report earnings after ASML lifted its sales outlook. We preview the numbers as we await clues on AI chip demand and whether spending is set to rise. Our very own Stephen Ingles is on the ground there in Taipei. And we're counting down the open of trade in Shanghai, Shenzhen, Hong Kong. Oof, it is a red rainstorm warning across Hong Kong here this morning. So yeah, get the rain boots out this morning.
The tears of England fans are raining
it's
all
everywhere. Sorry, John.
The city here.
Rubbing it in.
The opening bell is 14 minutes away. This is the China Show. No.
All right, your Greater China agenda looking like this here today. We just got that yuan fix.
Yes, we do. Sorry. Okay.
679 against the dollar here. So it is actually much weaker than expected here this morning. So certainly one thing to watch. We did have that PBOC briefing yesterday that talked a little bit about maybe they're less tolerant of the recent appreciation of the currency. So we'll watch that very closely. Any sort of CXMT listing updates, of course, as we count down to this big IPO. But that certainly has led to a bit of wobbles in the whole semiconductor trade overnight. That's why you saw Micron and the SOX index really fall substantially here on the concerns of maybe this company expanding capacity as well. Zhongzhi Innolight might be joining into the whole IPO discussion here as well. We're watching Baba, watching Baidu, watching ZTE, of course, Apple. Finally getting that green light when it comes to AI in China is going to be a big one here today. We're also watching XPeng as well.
Apple Intelligence and XPeng, I think it was the journal reporting here on XPeng that they will be perhaps looking to launch their humanoid. Let me just clear that up. I think it's a global release. Let me just look at that very, very quickly here, just so I get that. Yes, XPeng ADRs were up. Humanoid robot production. There we go. Launch that globally next year. Okay, looking out for that. Obviously, going into the session today, AI is going to be very much in focus. TSMC is going to be coming out with earnings later today, and Stephen Ingles is in fact in Taipei for us, our Chief North Asia correspondent, to give us a preview of what to expect. Steve.
Yeah, I mean, obviously, this is at the core of the spending spree, if you will, for the AI data centers and the like. And we really looking at the results from ASML, which came overnight. The European, of course, lithography maker, the EUV machine maker, giving pretty good guidance as far as possible pricing, as far as, excuse me, they didn't give the guidance on pricing. That was a story from The Information, is saying that they possibly could raise prices. That will have a spill down effect, of course, to its largest customer like TSMC. But they're also talking about capacity increases, maybe upwards of 30% by next year and another 30% possibly by 2028 because of the demand out there. They also raised their net sales forecast for a second time already this year. So fairly bullish, report from ASML, but a fairly tepid response. I guess expectations valuations are so sky high right now. So that's why we're really going to be drilling into TSMC, which has already, given that, the sales numbers, 68% jump in sales in June alone.
And what about in terms of the guidance on CapEx? Is TSMC likely going to increase what they had said before?
Yeah, well, the previous guidance was for, setting aside another $56 billion in capital expenditures this year. But UBS, for one, is saying it could go as high as $60 billion. So that's something we're really going to be looking at. Maybe top of the list of the many things that we'll be looking out for. Again, we're going to be looking at, Android handset sales, which have been dipping, outlook there, as well as, expansion internationally to the United States. That could potentially squeeze margins. And there's just so many different elements to this TSMC play as it relates to AI spending. We have Jensen Huang up in Tokyo talking up the Vera Rubin architecture. TSMC is the main producer of the CPU and GPUs in that architecture. So again, so much to drill down into when we talk to the CFO of TSMC tomorrow.
Looking forward to that, Steve. Fantastic. Thank you. Stephen Angle in Taipei. For us, just to mention also an update on Korea. So a couple of things, right? So first, you have this central bank decision. Number two is we're waiting for this announcement on single stock leverage ETFs. And now the KOSDAQ, the sidecar has been activated, given, of course, how quickly this market has fallen in that short amount of time. We're down 4.3%. We'll get you guys an update, of course, once we do have, of course, the lifting of that sidecar.
Yeah, there's a lot going on. There are also some headlines crossing your Bloomberg terminal now when it comes to the Iran side of things. So the U.S., it almost seems like a daily sort of exercise now, has completed that latest round of strikes against Iran. They did say that they did end strikes around 9 p.m. Eastern time, struck Iranian command centers, air defense sites, and struck a cruise missile sites on Greater Tumd Island. There. So that's the latest when it comes to that side of things. But of course, we have heard of the U.S. saying that they plan to and vowing to launch more of these airstrikes on Iran until Tehran stops attacking ships in the Strait of Hormuz. All right, we'll continue to watch, of course, where oil markets are. $85 for Brent here this morning. We got plenty more ahead. This is Bloomberg. All right, pre-market is looking like this. Hang Seng is up just slightly, but we are seeing when it comes to the chip stocks, they are out of favor here this morning, just given what we've been seeing when it comes to Korea as we await more details of what regulators could be announcing here in terms of ways to tame volatility around these leveraged ETF products tied to the likes of Samsung and SK Hynix.
Yep, we're looking at, so apart from that, obviously, Apple Intelligence, and of course the big story, Apple getting approval for this iPhone AI in China, Alibaba and Baidu coming up on your screens. ZTEs, of course, separately, but also this, the partnership with ByteDance on this Doubao phone there. There we go. Thank you so much. Okay, AI agent smartphones, according to GMN. Going into the open today, futures are looking like this, slightly higher in the Hang Seng Index, some pressure on the onshore markets. The opening bell is coming up next. This is Bloomberg. Good morning and welcome back. We're counting down to the open of cash markets here in Hong Kong and up in mainland China. Just a weather update here, and as you can see on the right side of your screens, it's been an extremely wet and disastrous weather morning here in Hong Kong. But the direction of travel seems to be favorable. We've gone now from red to amber, so that's... in orders of magnitude, we're slightly in better footing now than we were 60 minutes back.
All your kids' summer camps are still, hopefully, still on here for the rest of the day. So certainly that's one thing to watch.
Out of the house.
But it is a bit dreary, though, when it comes to when you take up risk assets here today. Obviously, there's a lot of lingering questions on what's going to happen in South Korea, this F4 meeting, as they call it, with the big financial regulators and the like when it comes to these leverage ETF products tied to the likes of Samsung and SK Hynix. Are they going to set some or maybe tighter sort of measures there to really tame the volatility. So that is one issue that we have to contend with here today. You are seeing when it comes to onshore markets opening up, we are seeing Shanghai fall about 1.5% at the get-go there. Most of the declines you're seeing in Shenzhen, which is very much the tech-heavy sort of sector there. Capricorn Tech, there you go, already seeing declines of more than 2%. And also the likes of CATL is lower by 1.5% today. So that's one thing to watch very closely here as we count down to, of course, this meeting between those Korean officials here on what to really do about these very leveraged sort of issues that has been really amplifying a lot of the stress in what we're seeing across Korea. Hong Kong's looking like this year maybe a little bit better, right? You are seeing that pivot back to maybe offshore equities here today, and really HSTECH seems to be leading that charge. We're up more than 1% right now, getting close to that 4,800 level for HSTECH. What's driving that has been, look, the likes of Baidu, Alibaba's up 4, Meituan's up 2. I think Apple getting that green light from regulators in China finally, right, for Apple AI intelligence. And looks like it's partnering with Alibaba and Baidu. So there you go. Those partnerships with those local players certainly is helping those stocks here today, 4.1% up for Baba as well. Also watching very closely when it comes to the chip stocks, right? So we talked about what Capricorn Tech is doing. This is what the rest of the space is doing. There you go. No surprises there. All are substantially lower here this morning, especially the likes of Giga Device, Hua Hong Semi down close to 6%. Zhongzhi Innolight, this is the one to watch, of course, right? They are said to be getting that approval from regulators in China as well for a listing in Hong Kong. So we're maybe nearing that possibility. The stock, though, is down some 3%. They could be part of this whole AI sell-off wave here that we're seeing across the supply chain, right? So certainly that's one thing to watch as well. XPeng, as Dave mentioned, right? There's this report that they could be launching some humanoid robots, right? This is according to the journal. So certainly that's one thing to watch very closely here.
Yeah, XPeng intends to produce more than 1,000 units per month by the end of this year, according to that report out of the journal, tracking the ADR jump that we had overnight. Now, back to the listing story, right? It's really coming at a time when there's really not a lot of momentum in this market. In fact, just in price, we're near the low end of the one-year range. I had a brief look at, I think, would be all the listings in Hong Kong trading debuts from Thursday last week to today. The vast majority are actually trading well below their listing price, right? So I think that just the window in the secondary markets is challenged currently, but of course the deal flow continues, but that really sets up perhaps not as nicely, of course, as one that's coming up. And you just talked about Zhongzhi Innolight here.
Yeah, I mean, just moving away from CXMT for a second, let's talk about this other big company and what our ECM team has really developed and what was reporting here. Bloomberg has learned that Zhongzhi Innolight is poised to get approval, of course, $7 billion listing in Hong Kong from the China securities regulator. Now, sources say this could pave the way for Innolight to be one of the Hong Kong's biggest listings in years. Let's bring in our Asia ECM reporter, Dave Sebastian, on what we know at this point.
Yeah, it's been a very busy summer for us and for the bankers as well. I mean, it's usually a time when people would go on break, right? But no, it's been way busier than thought initially, because we're set to see this mega listing, like the biggest in years potentially, set for its hearing potentially this week. And on top of that, like, you've also got other deals in the pipeline, including Shein, like the fast fashion company that's been lining up to list its shares for years. That's also coming as soon as next month, I mean, like we've heard. So yeah, it's been a very busy year, very busy summer. And it's really it's like the story of AI pretty much for this year.
So a lot of big listings. How big could this be? And what do we know more? Do you know a little bit more about the timing here?
Yeah, so it's set to be about $7 billion. Given, I mean, like it's really a factor of the feedback from investors, of course. But yeah, once they get the CSRC approval, that allows them to, list soon, pretty much, for shares.
Okay, yeah. So investors are positioning, and as far as where do we get that dry powder to allocate, right? So whether that's to Innolight, to Shein, CXMT, of course, is the big one, of course, which I think is starting subscription taking today, if I'm not mistaken.
Yeah.
There we go. So Dave Sebastian, fantastic. Thank you so much, our Asia ECM reporter there. Let's have a look at Apple suppliers. I think we touched on this earlier on getting the green light. Yvonne mentioned that, of course, government approval to roll out Apple Intelligence in China, modified, of course, to include Baidu and also Alibaba. Sunny Optical is up 2.5%, AAC 4% up to the upside. There's some of the hardware plays. And the H shares, of course, Luxshare, which listed last week here in Hong Kong. So Bloomberg Intelligence thinks that the move could actually help boost Alibaba's role in China's AI landscape. Catherine Lim is with us right now, our senior analyst, to talk us through this. And I guess let's start off with why these approvals actually matter for Alibaba, Catherine.
Well, this is a long-awaited approval. The tie-up is not new. What effectively came through really was that, with the approval, we could see it as, Beijing effectively certifying that, Qin is an infrastructure-grade AI platform that is safe, controllable, compliant for mass market use in China. And this is going to be important to Alibaba because it really upgrades its status in the AI hierarchy. So now global, domestic can plug into, when they want to actually scale AI in China. So while it doesn't really quite change Alibaba's earnings profile, again, it does look like it is going to be the gatekeeper for, some of the foreign players like Apple in China.
Yeah, I mean, I'm sure it's going to be a big catalyst for Apple, given that they've been waiting for so long for this sort of access. What about for Alibaba? What's the sort of earnings impact you could see? And could it be a big earnings driver for Alibaba?
Yeah, I hear you. I guess for Alibaba, it's really more strategic than financials. We don't really yet have visibility on the revenue sharing, usage levels, and how Apple, for instance, will price, some of their features in China. And, let's not forget that it is still rebuilding its market share. And this is Apple against Huawei and other Android brands. So, again, coming back to Alibaba, I do think that as it actually works with Apple on this, it is going to be more strategic, and the near-term impact on Alibaba, I don't really expect that to actually have a material impact or swing the needle for Alibaba, who will continue to actually invest in R&D and what it does need to actually do to actually cultivate some of these, agentic or new spending behaviors in China.
Okay, so well, this is another hardware play then, so right? You have Huawei. We just talked about ZTE on a completely separate story. You have Xiaomi, you have Baidu. How does then this reshape this AI race there in China?
Yeah, so, China's AI race, if we look at it, we can break it up into two tracks, one of which really, like what, was discussed, hardware-centric ecosystems from Huawei to Xiaomi and cloud-based AI services from Baidu. They will continue to embed their own models into devices and apps. And, the other track is where Alibaba comes in because, it is now an infrastructure provider that foreign platforms like Alibaba can actually depend on. And so, the Apple deal itself doesn't really mean that it's going to knock off Huawei or Xiaomi, in their perch in smartphones. They will continue to lead on integrated device plus AI, if you ask me. Really what we now should focus on is that, in China itself, the regulatory trust, the governance, is going to be as critical as the raw model platform itself. And again, with this signed off from the authorities, I think, Alibaba can now formally be recognized as a partner that can keep global AI within, the China guardrails, which, can actually help build its business in the longer term.
Catherine, thank you. Catherine Lim there, our Bloomberg Intelligence senior analyst on Apple intelligence in China. We're marking some of these BOK lines that are crossing here. So this is what we're hearing from really just the statement so far after they did hike rates for the first time in 3 years, right? So they're talking about inflation to remain above target for a considerable time. They talk about exports, investment to sustain robust growth. And also when it came to the growth outlook, does face his chip, Mideast, and trade risks as well. But domestically, they're saying exports and domestic demand to continue robust improvement. So it's leaning a little bit more hawkish. It's interesting enough. We'll see if this means that they can continue to hike.
Yeah.
Certainly that's one thing we'll be seeing what the governor is going to relay in this press briefing in the next hour as well. We have seen the Korean won strengthen and come off a little bit on the back of some of these comments as well, Dave.
Yeah, hawkish enough to signal another one coming in August, I think, is a key question we'll get into, of course, with the briefing, and, of course, Mitul Kotecha, who joins us this time, around this time in the next hour to help us unpack the Korea story for you. Coming up here in shows, this time yesterday, speaking of rewinding and forwarding the clock here, we had the GDP print, of course, coming out of China. And since that point in time, several banks have now come out and revised their forecasts lower for the Chinese economy. Those are coming up on your screens very shortly. Here are your forecasts for you and the changes thereof. More on this in a moment. This is Bloomberg. Okay, let's have a closer look at some of the renewed thinking around the growth targets for the Chinese economy, given, of course, the softer growth numbers we got yesterday and some of the banks out there, of course, their prior forecasts, and in the last 24 hours, their new forecasts on the left side of your screens in yellow. Coming through some of the commentary that's come through, Citi thinks they now see a rate cut coming out of the PBOC. Morgan Stanley, of course, reducing this and just underscoring, of course, this narrative of this K-shaped recovery. Goldman Sachs and ANZ also coming out with their own commentary here, Yvonne.
Yeah, so trimming at least what they think for the year end, and certainly a lot of questions about whether they can in some way still reach that target of 4.5% to 5%. It seems like the street still remains that they can. It's just maybe now things have been trimmed just a little bit as well. What we heard from the likes of Citi, they still expect that PBOC rate cut. Morgan Stanley saying that deepening K-shaped economy and the like, right? And then you have the credit data that came out also yesterday, and it continues to show that same story, which was disappointing as these new loans did miss forecasts. And the macro picture, as we were talking to Zhang Zhuwei yesterday, is basically it hasn't really changed in some ways. It still remains challenging.
Very, very challenged relative to estimates. As you can see, this is the Citi Economic Surprise Index and has remained in negative terrain since about May. And, of course, this is an ever-moving target, of course, following a decent spell going into May, but this is where we are currently.
Yeah, and then you look at the credit data, right? So it was basically, you saw a miss when it came to new yuan loans. Aggregate financing was also a miss as well. It's interesting, right? Because usually the month of June is where you start to see credit extension picking up, because a lot of these banks are really pushing for more lending to reach those quarterly targets. But it doesn't seem like the case, right? It's still seeing signs of really getting back after this sort of years-long funk, given what's happened domestically. So certainly that's one thing to watch very closely. And whether now, this month, could they actually lower the loan prime rate? That is certainly one thing that people are expecting, or at least speculating right now. Let's bring in Bloomberg Economics and their take on this. David Chu says China's slack June credit is the latest sign that the economy needs stronger support from the PBOC. David joins us now. Everyone's watching the Politburo meeting now, maybe for the next sort of course of action, but what was the credit data plus what we got yesterday? Was it soft enough to finally see some stimulus, you think?
Well, I think the data and the credit already enough, for the PBOC and the fiscal side to push the economy harder. But the thing is that whether we can see it soon. Because we have been there, the policy stance has been there for a long time. And it seems that the authorities are not so in a hurry to push it. And yes, that is why we are looking at the upcoming Politburo meeting to see whether the top leaders will allow or let the PBOC to do that. And if we read the early sign from the State Council, it already called for more accommodative policies, and also for the so-called anti-cyclical adjustment. So I think that is an early sign. But the thing is that what time they will do it.
Well, aren't interest rates, for example, as an example, aren't they accommodative enough? Like what more could we see? Okay, in what form could we see, and by how much?
No. The reason why we say it's not low enough Because if you look at the, you cannot only look at the PBOC's policy rate. You need to also need to look at the market rate. And if you look at the loan rates and the mortgage rate, it's still much higher than the return on asset, the company's return on asset or the household's rental yield, much higher. So that it means it has a lot of room to get lower. I mean, the market rate. And the problem is how you can get the market rate lower. The PBOC need to show the attitude, to show their willingness to get the rates lower. How?
Well, what's the mechanism then? Because they have the short end, which they're more focused on right now, but then suddenly we have to go back to the old playbook and the benchmark rates, which tend to move some of the market rates even further. Correct me if I'm wrong.
That is the problem. If you return to 20 years ago, things could be easier. But now it is a market-oriented system, right? And the banks need to have a certain interest rate margin so that to keep their profit. So what the PBOC can do, right? You need to make the market believe you are going to do more easing ahead, and so that the bank will lower their loan rates. That is the channel.
Well, it's a good problem to have, which underscores the reform in the system. David Chu, thank you so much. Out of Bloomberg Economics there. From one central bank to another, the Bank of Korea out with a rate decision to hike interest rates, and the decision was unanimous. That's the latest line that's come through so far from, I believe, the statement. And in the next hour, of course, we'll be attuned to the briefing coming through out of Seoul. I'll look at markets. Lots more ahead. This is Bloomberg.
Well, Hong Kong billionaire Ka-shing and his family are preparing to usher in a new generation of leaders after an overhaul at Hong Kong's largest conglomerate. Now, Bloomberg has learned that CK Hutchison and some senior executives are expected to retire after the firm wraps up the sale of various assets.
Yep, they're making some moves. Shirley Zhao, our conglomerate reporter, is here with us to talk us through the expectations around who eventually heads what and what personnel changes we're watching here.
Right. So we've learned from investors, bankers, and business associates close to CK Hutchison that some of its longest-serving executives are expected to retire after they oversee the completion of the group's divestment from major sectors, including telecommunications, ports, and retail. And most of these executives are in their 70s, and they have been serving the group for more than 30 years. And one example is the deputy chairman, Canning Fok, who started working for the group in 1979. And he's expected to retire after he leads the completion of the group's exit from the telecommunications sector. So the group has really been accelerating its divestment from these sectors. So it's sold UK's largest telecommunications operator, and it's agreed to sell the UK's largest power distribution networks, and it's proposed to sell the majority of its portfolio, and it's also considering a potential IPO of its retail arm. So the expectation is that, after all these have completed, some of the executives may start to retire. But of course, retirement is also subject to other factors like how long they want to keep working and whether there are suitable candidates to take over. And also, these deals may still take quite a while to complete because of the complications and valuation and geopolitical risks. So we're still talking about, quite a while down the road.
Yeah, and we started seeing some of these OG conglomerates in Hong Kong really reshape themselves. I think Jardine is the one where they hired all these PE executives to come and really kind of take charge.
Yes.
How significant would it be if CK does make this sort of transition? And what sort of skill sets are they really looking for in this next sort of leadership?
Right. So if CK Hutchison does complete all these deals, and we're looking at the Lee family having a war chest of at least $41 billion US. So how will this amount of money be utilized? And and what industries will they invest in, or what kind of returns are they creating to investors? What's the next step? What's the next chapter for CK Hutchison? These are the major questions investors are having in mind, and they're expecting the future leaders of CK Hutchison to answer these questions. So assembling the next generation of leaders would be a crucial test for CK Hutchison's current leader, Victor Lee. So a lot of people are expecting, when CK Hutchison is facing a new world of so many geopolitical risks and disruptive technology development, the new leaders may need to possess, different skills from the current leaders who are really adept deal makers. But the next generation of leaders may need to have a vision in technology, and they may need to be more aware of geopolitical headwinds.
Shirley, thank you so much. I invite everyone to check out, of course, that fantastic piece by our team. It's on the terminal. It's also on the website. Shirley Zhao, who covers conglomerates, consumer, and gaming for us here. Just a brief look at markets before we head into a break. ZTE, A&H shares on your screens coming up very shortly on the back of the news. You see bottom of your screens. Top gainers across the benchmark today. Hang Seng Index is actually bucking the overall trend. We are higher on the benchmark today. You have, of course, the Alibaba story, separately the Tencent story, broadly speaking, on Tencent, of course, and Xiaomi and some of the hardware plays to the upside there. And yes, we are getting that decent upside here today. Very quickly, a look at the benchmark. We talked about the Hang Seng Index. We did see some pressure onshore, specifically on the China Index, and I wonder if that's still showing up across these markets. We have lots more on the way here. In the next stop, the China show. We'll get into, of course, some of the big movers and what's driving such. And, of course, also coming up will be the press briefing out of the Bank of Korea.
Yeah, any indication of any hints on what financial authorities are really considering here to contain the fallout from these leveraged ETFs is going to be key.
Yeah.
It's not just going to be about rates, really, in this press briefing here. So certainly we'll bring you the latest there from Seoul coming up. You're watching The China Show. Welcome back to The China Show. A look at the HSI half-hour into the session.
I feel hungover, but I didn't have a drop of alcohol. I just didn't have any sleep.
You didn't sleep. That's it, because you're up watching the Argentina and England game, and certainly I think a lot of us are a little bit sleep deprived here today. But yeah, actually, when you wake up, you see the likes of the Hang Seng actually being an outperformer in this region here this morning. When you are seeing the likes of HSI up 1%, 8 shares are also catching a bid here this morning. Offshore, specifically the Shenzhen side of things, is actually seeing a bit of a sell-off. So certainly that AI story, the chip story, continues to be roiled here, depending on what we hear from South Korea, of course, in the next few hours or so.
On the single stock ETFs, right? I think it's one of the first times we're looking at a BOK decision. We're not focused on the BOK specifically because of all the leverage that's gone in, not into the economy, but into the stock market. So stay tuned for that. SK Hynix, we're now down 11% on the benchmark. I think we were up, I forget already. I think 2 days ago we were looking at something like this. Yesterday it was the complete opposite. TSMC's out with earnings today. Keep an eye on that. Of course, we have a preview coming up with Steve. We talked about that already, so stay tuned for that. Those big numbers, of course, coming through later in the next few hours or so. The benchmarks are looking like this. Nikkei, Topics, KOSDAQ, and, of course, Taiwan coming up on your screens. A look at Brent prices. I think we were up 4 days, so we should be up a fifth. We did get a further update coming through out of the U.S., again, completing another round of strikes. We are trading at about 85 right now. We have consolidated after, of course, that initial spike. I think we're up 18% so far this month as far as Brent prices are concerned. The dollar story is showing up in Asian FX this way on your screens very shortly, with another weak fix coming through out of the PBOC, well, at least weaker today relative to the estimates for today. Dollar Japan and, of course, dollar Korea. The briefing on the BOK side should be starting in about 15 minutes or so. So we'll obviously bring that to you once we have more
I think beyond just like what the rate hike trajectory could look like for the BOK, it could be some question questions, but I think a lot of it is going to be driven by what's been going on in these markets, right? And whether the governor actually sees these swings in asset prices as any way affecting monetary policy, right? And whether they have to, in some ways, lean a bit more dovish, given what the retail sector has really suffered here in the last couple of days when it comes to these outflows and really what we've been seeing in the chip sector, right? So certainly there's a lot of questions going on, a lot that's happening in South Korea. Let's really get to what we could see, right? What sort of announcements or measures could be announced here regarding leveraged ETFs that are being linked to Samsung Electronics and SK Hynix? Let's bring back Lian Ting Tu, our managing editor for Asia Equities. Just tell us what really could be on the table here and what could it mean for this Korea market?
Yeah, the most likely outcome is a package of measures aimed at cooling speculation mainly, rather than shutting the products altogether. Regulators and brokers have recently been discussing some measures, including raising minimum deposit requirements, spreading out ETF rebalancing trades during the day instead of the concentration at the end of trading, and strengthening liquidity provision, I should say, to reduce market dislocations. The issue has become quite politically sensitive, with opposition lawmakers even calling for some of those products to be delisted after they grew to be a dominant force in trading Samsung and SK Hynix. And any tightening, as you asked about market impact, could reduce some of the sharp swings that we have seen recently, and that has spooked Korean markets recently. And also, the regulators will have to pay attention to strike a careful balance, because if they move too aggressively, they may risk disrupting liquidity and undermining investor confidence in a market that has so far been the biggest beneficiary of this AI boom.
I mean, could higher rates help that cause, Lian Ting? I mean, the BOK just raised interest rates first time in 3 years. What implications could that have on the equity market specifically, Lian Ting?
Yeah, higher rates could add another layer of pressure to a market that has already become very volatile. For leveraged ETF investors, the imminent effect would be that borrowing and funding costs become much more expensive, which could dampen some of the speculative activity. And that is broadly consistent with the Bank of Korea's growing focus on financial stability and excessive leverage. For equities, more broadly speaking, the signal is a bit mixed. On the one hand, the rate hike reflects confidence in the economy, with AI-driven chip exports becoming really strong. On the other hand, a sustained tightening cycle could reduce the risk appetite and compress valuations over time. The biggest risk would be if policymakers move too aggressively, just as investors are already questioning the durability of the AI trade. And that combination could amplify volatility across both chip stocks and all these leveraged ETFs built around them.
Lian Ting, thank you. Lian Ting Tu, our managing editor for Asia Equities. For more on the market story, joining us here in set, David Savage, our MLive strategist, with a closer look. Why don't we start with Korea and where your head is right now?
Yeah, I mean, I think it's actually sort of reflective of what we're seeing with the Bank of Korea, right? I mean, the fundamentals might look, very, very strong, but, we're seeing, of course, realized volatility is now above 80 over the last 30 days, and it's been, very much a roller coaster week this week. Very sharp decline on Monday, roller coaster day on Tuesday, and Wednesday a sharp gain, and now here we are on Thursday. And it comes after ASML earnings were very, very strong. They beat on top line, bottom line, guided higher, and laid out plans to boost production. Everything you would want, and U.S. chip stocks sold off, and now we're seeing quite a sell-off in Korea. And it's really being concentrated, of course, in this memory trade, which continues to unwind. And so I think for markets, you're left with sort of two conclusions. One, it's sort of a normal correction after a very sharp gain that's being made a lot uglier based on just the massive buildup in leverage in some of these more pro-cyclical leveraged ETF type products. Or is the market sort of front-running some fundamental catalyst that isn't quite obvious yet?
TSMC is coming up with earnings. Just given the blowout earnings from ASML wasn't enough to really excite or really change sentiment, do you think TSMC could deliver in any way?
I mean, I think the odds are not in its favor because, we've now seen a bit of a trend now where we saw Samsung produce, very strong preliminary earnings. We saw, TSMC earlier post, very strong sales numbers. ASML earnings, and none of these have sort of put a floor under these declines. So, TSMC earnings, obviously we're going to be looking at, what do the CapEx numbers look like? But frankly, we've already had quite a few, signposts that the AI CapEx cycle still remains intact. And we've seen some really good strength out of, the U.S. hyperscalers, for instance, of, those shares have started to stabilize and really help boost the broader benchmark in the U.S. But of course, if the memory trade continues to sort of unwind, it's going to continue to weigh on the KOSPI index in particular.
David, thank you, David Savage there, our Bloomberg MLI strategist, on what to expect out of Korea, out of Taiwan in the next few hours or so. And still ahead, we still have to talk about CXMT, right? That was also part of what may have led to the sell-off across the stocks index overnight and some of these chip stocks as well. The Chinese memory chip giant is drawing investor interest before the stock even starts trading. We'll explain how crypto traders are already placing bets on the value of CXMT's blockbuster IPO and what that says about appetite for China's AI ambitions. We have that story coming up next. This is Bloomberg. Well, we got to talk about this upcoming IPO, CXMT. We're learning a little bit more about, who's going to get, a slice of the pie, right? It seems like, largely speaking, global investors might be shut out from this upcoming mainland IPO due to various regulatory restrictions. And now traders are looking at creative proxies to get their piece of the action.
Winnie Xu is here with us, our Asia equities reporter, to talk us through those details and those proxies and those Plan B, Cs, and Ds. Shruti Rennie is also here with us to talk us through the broader context. Winnie, let me start with you. Okay, so obviously very big listing. Lots of people want to get their hands on this. It's not as easy depending on where you sit in the world. Just talk us through this.
Yeah, exactly. Because I just had fund managers telling me that they really wanted a pie of this and that I should be writing about how they don't have access to this. And hence they are looking for different types of ways to get exposure. And one example is through the banks, the likes of CICC, CSC, which are the sponsors of the IPOs. And then you've also get some other banks which are investors of the IPOs. So those have been really rising in the past 3 months. Then you also have along the supply chain, because investors now expect this money raised through the IPO to be deployed into the further investment into the broader chip-related industry in China. And hence you are seeing, for example, the suppliers of CXMT, ACM Research, Biotech, and also Jiangsu Yake Technology, all of them jumping about 100% in the past 3 months. So really seeking different types of exposure through that.
Yeah, it seems like it's a bit scramble for some of these alternative trades, Julie. I'll bring you in here right now because of this company, right? I mean, we were just talking offline about why people might be concerned. I mean, there's reports that they might be expanding capacity as well. But your sort of headline for your column this morning is, guess who's coming to crash this memory chip party? And you think it's CXMT.
Right, absolutely. Every time there's a big party, you bet China will be in it. CXMT has already been grabbing market share from the big three, Samsung, Hynix, and Micron. Its market share has doubled to 8% from 4% a year ago. And this IPO is $10 billion. And $10 billion goes a long way in China. And we know China is very good at building factories faster than everyone else. So this is a real concern when CXMT has this kind of a dry powder coming into its coffin.
So the big question right now is, does all this money, not just from CXMT, right? SK Hynix raised a ton, Samsung, I think, might be raising also, based on some reports. How quickly does the supply glut shift into perhaps a deficit?
So
on memory,
yes, the industry standard, the standard analysis basically says that there will be a supply shortage all the way to 2027. But going into 2028, we are going to see an oversupply. But the problem is right now, the big three, they've been trying to get their customers to sign long-term contracts to lock them into those steady flow of Ka-shing flow. And my problem with that thesis is that if you see a lot of supply coming online in as early as 2027, 28, would customers sign those contracts that are favorable to suppliers?
Woody, you've also been talking to, I mean, I know there seems to be a scramble, but there are still some investors that are a bit wary about this upcoming IPO too.
Yeah, exactly.
What are their concerns?
So I think the geopolitical risk is the biggest concern that a couple of them have flagged in terms of why they're still just on the sidelines right now, just because of a potential blacklist from the U.S. when it comes to if things heat up again between the two countries. But again, I think to Shuli's point that some of the investors, they already have the exposure to the memory space. If they already hold SK Hynix or Samsung, they're not really in a rush to buy further into CXMT when there is some other risks to watch.
Talk to us a little bit more about, so you mentioned some of the names tied to this. You could also buy the brokers or the underwriters that are sort of underwriting the deal. In the crypto front, these perp futures contracts that are looking at this, it's part of the story. We've seen some versions of this. Prices are spiking. We're spiking, yes, Wednesday. So this is clearly across the board. It's not just an equity story.
Yeah, exactly. So you can see that is another type of exposure that people are looking to because they don't have the direct exposure and hence looking into potentially trading in these different options and different alternatives. But it really just goes to show how there is just so much interest from investors. When we talk to Eastspring, they are expecting over allotment, over subscription. Right. And just yesterday, when I talked to PineBridge, they were saying that, yes, they are betting on SK Hynix and Samsung right now, but they really see this upcoming competitor as someone that can really take the shares from these companies as well when they actually get listed.
And so, just to be clear, I think for viewers who might not be too familiar, it's listing in mainland China. And unless it's part of the Stock Connect, if you're in Hong Kong or sitting outside mainland China, you can't get direct access to this once it lists. What would be creative ways to, in your view, Shuli, to get some proxies, some exposure to this?
So one creative view is to do the so-called total return swap. Like
what does that mean in English?
So basically, you as an offshore investor, like you get the onshore brokers to buy the shares for you, right? And in time, you swap with them. That's one way they do. And then some investors who are extremely creative, they will actually want to bring some money onshore and open brokerage accounts there.
It's interesting. I think our Bloomberg intelligence analyst, Charles Sum, was talking about what he saw in the prospectus, right? That actually this company doesn't have any plans or spending plans to develop HBM chips right now. They're purely sort of a DRAM play. And is that enough to really kind of hit the likes of Samsung and SK Hynix, you think?
So CXMT, if you look at their prospectus, 200 pages, there's no mention of HBM at all. But that doesn't mean that they're not doing it. They're just very secretive about this. So according to Bloomberg Intelligence, they think that the HBM is already at the engineering stage, but it's not going to be on the commercial scale stage until 2028, perhaps. But the problem is CXMT is already competitive in, producing the conventional DRAM. And actually, the big three, they are getting a big chunk of their earnings from the conventional DRAM sales, right? Like Micron's 80% the profit margin comes from the price boost of commodity DRAM, not from HBMs. So that is going to hurt their earnings substantially.
How much at risk are the China-specific businesses or exposures of the likes of Samsung or SK Hynix that supply onshore customers? Does that then become at risk because CXMT now has the war chest?
Absolutely. I mean, the Samsung and the Hynix, they are getting a lot of sales onshore as well. In fact, they are bigger than CXMT. But everyone knows CXMT is the landlord's son, right? and the customers, they will want to go buddy up the landlord's favorite child. So that is a real threat, I think.
Tell us a bit more about this upcoming listing. What does it mean for the likes of SK Hynix and Samsung? Do you think some of these leveraged ETFs that could take some of the flows away?
Yeah, exactly. Probably in the longer term. Well, for now, in the short term, we did see a bit more caution coming through. In the past few days, people are selling a bit more of these hardware names in China, also a bit of a profit taking. But when it comes to the longer term trend, once it's listed and flows will be coming through, so that will mean that these monies that are getting poured into the proxies of CXMT will be leaving, plus the money that have been going into Samsung and Hynix potentially being diverted as well.
All right. Team, thank you.
Very nice.
Of course, Winnie Xu from our Asia Equities team and also our Bloomberg Opinion columnist, Shuli Ren. Yeah, we got another big upcoming IPO to tell you about, right? We've been told that Anthropic is seeking to meet with investors ahead of its potential mega IPO, and sources say that banks leading the offering are scheduling meetings between investors and the company in the coming weeks. Bloomberg earlier reported that Anthropic is considering an IPO as soon as October, putting it ahead of rival OpenAI's potential listing in 2027 and potentially DeepSeek as well.
Meanwhile, JP Morgan CEO Jamie Dimon warned about the risk of making a sophisticated AI system like Anthropic's model here widely available, comparing it to a ballistic missile. Now, rapid advancements in AI have both businesses and governments assessing potential threats. The issue took on more urgency after, of course, Anthropic said that that model specifically is so good at finding software loopholes and vulnerabilities here that it cannot be released to the general public.
Mythos, that's a real issue, which I know our government is on top of at this point. It's not to stop, small banks from gaining stuff. It's really just to make sure we roll out the stuff that we know is being controlled, because you're giving ballistic missiles to individuals with Mythos, basically.
All right, let's take you straight to Seoul, where the Bank of Korea Governor Shin Hyun-sung is currently speaking there. And yes, talking a little bit more about, of course, their decision and rationale to raise rates for the first time in 3 years today. We learned earlier that the decision was unanimous, and Shin is now talking a little bit more about chips and the price surge, which has lifted nominal GDP, and do expect higher FX to keep feeding into inflation for some time. Quite hawkish commentary, I have to say, from the new governor, and really saying that this AI boom is a major driver of stronger growth outlook. So we'll continue to see what the guidance means and really what this rate hike means and what it signifies here in terms of the overall, how many more hikes could come from the BOK.
Yeah, this is a start of not just one, clearly. Yeah. And of course, do we get another one next month is the other one we'll get into. More details coming, of course, once we have more information coming through out of this briefing. In the meantime, speaking of AI here, the CTO, Chief Technology Officer of Palantir, says Chinese AI models are posing an economic risk to the United States. This comes as concerns among, of course, top American AI companies grow over Chinese rivals improperly using this technique known as distillation. Shyam Sankar spoke to Bloomberg at the 2026 Pennsylvania Defense and Innovation Summit.
My view is that national security is not an end unto itself. It's a means to an end. And the actual end is American prosperity. And so I think it poses a threat to American prosperity. These Chinese open source models are really the result of distillation attacks. Most of this is just stolen American IP from Frontier Labs. And I think the Frontier Labs should do more to protect that IP, and that's in their own economic interest. But I'm less worried about it in the present moment because the gravest threat to us is not homicide, it's suicide. It's an inability to turn these tokens into economic value and generate American prosperity for it. You see that with the proposed moratorium in New York on data centers. Like, turning our back on AI would be as consequential a mistake as turning our back on the atom in the 70s. And we're starting to see a burgeoning, it's just the beginning, but a burgeoning U.S. open model ecosystem forming. NVIDIA's Nemotron models are very good. I think you're going to see in the next month a slate of announcements of other American companies, non-frontier labs, sometimes called neo-labs, who are putting out open weight models that companies are going to be able to cheaply fine-tune and capture their own alpha in weights they control.
In the final minute that I have you, part of the U.S.'s strategy when it comes to national security has been to have the government take equity stakes in companies that are deemed critical to national security. We know the idea has been floated when it comes to some of these frontier labs. I'm wondering what you make of this strategy. Is this the right way for the U.S. to go about it?
Well, I think it's very case dependent. I'm glad it's an option on the table. I think for some companies where they need a huge equity injection, it could make a lot of sense. For other companies, based on where they are in the mix of business they do between the commercial and government world, I'm not sure it makes as much sense. But I'm glad it's an option that's on the table. It should be a consideration.
Okay, the Palantir CTO there, from one AI story back to the other big one, of course, in this part of the world. The Bank of Korea just holding its briefing right now following the decision to hike interest rates for the first time in several years. And the question for markets right now is the economy doing well enough that it merits the BOK hiking even more from current levels?
Yeah, and I think, when he talks about what's been going on domestically, right, when it comes to exports, investment, consumption, all remain strong. So the growth outlook still looks quite robust according to what he is saying here right now. What else are you? Oh, and then we are now getting some lines here from the finance minister. So now they're saying they're going to hold the meeting on markets later on Thursday. We're still trying to hone down on really what timing is, but really we know that's going to be later on today as they talk about maybe some announcements on how to really, I guess, sell these sort of, how they're going to market and sell these sort of ETF, leveraged ETF products there moving forward, the ones that are tied to Samsung, SK Hynix as well. So, yes, I'm sure there's going to be some questions about that to the governor now, too.
How they trim some of the froth, right? And, in some ways allow the markets to still invest around the theme, but not give them too much, too long a leash.
Yeah.
That it becomes counterproductive. And reason why, case in point, simply look at 30-day vol, actual vol on the KOSPI index. It's now actually surpassed the highs that we saw back during the GFC. So just some context in case you're just joining us right now. The reason this finance minister headline is important and that meeting for later today is because you have the finance ministry, the Bank of Korea, the Financial Services Commission, and the FSS. That's the F4, as they call them here, of regulators are discussing ways, an announcement around single stock leveraged ETFs. More on this in a moment. Lots more ahead. This is Bloomberg.
11:29 a.m. in Tokyo. Japanese markets are going on break in just a moment. And yeah, we could use it here today. We continue to see the sell-off across North Asia markets and really driven by the likes of the KOSPI here as we await some sort of announcement here from the F4, the financial ministry. There in just the last couple seconds say they will hold that meeting on markets later on Thursday. In the meantime, though, you continue to see a bit of a capitulation when it comes to some of these AI trades, chip trades and the like. And the Nikkei is down close to 3% right now, 162.11 for dollar yen.
Yeah, some of the, going into earnings season in the U.S. specifically, the market behavior seems to suggest we're not easily impressed now with good earnings. ASML is a good example, and I think we came out this morning with the SOX index selling off as well. TSMC is coming out, and that doesn't actually bode well, the reaction function of markets recently.
Yeah, pretty high bar for them to really satisfy what traders are expecting here. And I think a lot of guidance is going to be really on the CapEx spend and whether they can actually increase what they previously had already projected of, I think it was like 58 billion or something. So certainly that's one thing to watch. The lines out of Seoul are certainly quite interesting to mark as well. Quite hawkish commentary coming through from the governor of the BOK after they did raise rates for the first time since 2023. Let's bring in Mitul Kotecha, head of FX and EM macro strategy Asia at Barclays. Mitul, it's always great to have you on the program. So what do you think for the BOK? Is this the start of a tightening cycle for them?
We think so. Our view has been that the BOK would start hiking today and potentially hike again in October and then maybe April next year. Clearly, as you mentioned, some of the rhetoric has been fairly hawkish, and there has been some speculation of back-to-back hikes, as in another hike next month. We will see, but nonetheless, this is the start of a hiking cycle in our view. And markets have been primed for this. We know for some time rate expectations have shifted higher, and markets have been actually pricing in well before this hike, several hikes in the Bank of Korea. So I do think this is well telegraphed, well expected, but some of that hawkish rhetoric does highlight how much that strength in AI demand and exports is feeding through into a broader global growth cycle in Korea and of course, inflationary cycle.
Yeah, it feels a lot structural, doesn't it, Mitul? The reason I frame it that way is the next meeting, let's talk about August. It's 6 weeks away, which is an extremely short period of time for anything of a structural element to change. Do you see anything that could prevent the BOK from hiking again, is my question, next month?
I mean, I guess some things have changed more recently. We've had the Korean won strengthening fairly sharply just in the last couple of weeks or so. The SK Hynix ADR and potential hedging flows and repatriation flows into Korean won from that, which have been cited around $1 billion a day, could also be playing a part there. And that could, at least from an FX perspective, take some of the steam out of a potential next hike. Again, on the other side of that, of course, we've got oil prices that have moved sharply higher since the re-escalation of tensions in Iran, and that's not going to play well on the inflationary front. So it does become a bit more balanced, but we know that exports are super strong in Korea. There had been this sort of K-shaped recovery profile, but there have been signs that some of that's spreading out to the wider economy as well. And so, clearly, as I said, this is not the one and done. It's still questionable whether they hike again next month. But and as you say, it's a short period of time. Bank of Korea may want to see more evidence. But again, look, if there's a real collapse, and we talk about AI and tech stocks, and there's a real collapse in equities and a tightening in financial conditions, that could also potentially put a brake on BOK for now. But I think the cycle is still here.
What do you think is going to be the dominant driver for the won then? Is it going to be just overall equity flows, global risk sentiment? Is it going to be oil prices? Is it going to be interest rate differentials in the U.S.? What do you think is going to be the big driving force?
Well, it's been really interesting that we've written a lot about this. The fact that, we've had this, at least until recently, this massive run-up in Korean stocks. When I say Korean stocks, I'm talking about Samsung, HK Hynix, relative to other stocks, and this rebalancing of outflows. So we've seen a huge amount of foreign selling from Korean stocks, which has weighed on the won. And I think this is still something that's very much in focus. And if we see further foreign selling accelerate, i.e. further rebalancing flows, that could prompt a reversal in these recent won gains. So that's something we're watching closely. At the same time, domestic retail outflows had slowed down, but are starting to pick back up again. So we're looking at that as well. So it's interesting that even with this current environment we're in, the won has really failed to rally despite massive gains in equities. The other thing is the weak yen. The fact that dollar yen is sustained above sort of 162, and at the moment, no sign of intervention. That's a factor that keeps the won weak. So we potentially see short-term gains in Korean won, followed by some weakness thereafter.
That takes us then into the broader dollar question, and let me just put it simply. You mentioned dollar yen at 160. The dollar won could briefly be in the 1400s, but that could be fleeting. Is the dollar overvalued, Mitul? And if it is, it's overvalued against what, specifically, in your view?
It's a good question. Look, I do think the dollar positioning and sentiment is looking quite stretched. Clearly, our measures have shown that there has been an increase in sentiment towards the dollar. We've also found that the flows into the U.S. are increasingly less hedged or even unhedged, which has helped the dollar to continue to strengthen. We know that the U.S. economy is outperforming. U.S. asset markets have been doing super well, and that is also helping to drive flows into the U.S. So there's a sense that the dollar is finding an upward cycle of its own. We may see some short-term correction given the stretched nature of positioning, but we're pretty constructive over the medium term on the dollar. We talked a lot about a dollar risk premium that's been in the price. It could have ended up, was around 6%. In other words, the dollar should have been around 6% higher than it was. But due to policy uncertainty, tariffs, escalation in Iran, et cetera, the dollar generally didn't live up to that expectation. But we think that premium's narrowed substantially, and the dollar is in much better shape. For example, Kevin Warsh, as Fed chair, has allayed some of those concerns about Fed independence, and that's allowed the dollar as well to continue to remain firm. So, yeah, it's very difficult to see any sustained down move in the dollar here. We're pretty constructive in the coming months for the US dollar broadly.
How do you think the Fed and maybe this new war sort of era could impact the dollar in any way? I mean, it seems like the market, after that CPI print this week, is now pricing out the possibilities of sooner sort of rate hikes. Do you agree with the market pricing right now?
Well, our house view is that the Fed doesn't tighten at all in the next several months. So we've got a pretty flat profile. But as you say, the market had been pricing in rate hikes. They've now priced out a July move, especially after the PPI data, which reinforced the softer CPI numbers. That said, look, the Fed does sound a little bit more hawkish under Walsh. We saw that at the last FOMC meeting. We saw that during Walsh's testimony to Congress. And that, in a sense, still keeps open the door to a hike in the months ahead if inflation doesn't cool as quickly as hoped for or the labor market tightens further. So these risks are still very much in place, even as our view is no hike from the Fed. The risks are still skewed towards tightening at this point in time. And I think the Fed at the moment is very much data watching, as we all are. But it's not just Walsh, but we have seen other comments such as Fed's Waller this week highlighting potential risks of tightening. So I think the bias is still potentially for higher rates. But as I say, our house call is for no move.
Just a last note, if you could, on China. I mean, we've gotten a series of numbers recently on economic indicators. Obviously, weak growth, strong exports. The PBOC held, of course, that meeting yesterday on monetary policy. Just your takeaway here on the macro picture in China and what that means for the exchange rate.
Yeah, it's a good question. Look, I think the data, as we've seen this week, has been soft on the domestic front. Credit growth weakened further. Retail sales are still very, very soft. Industrial production is doing better, but that's because of export growth. But it's a real dichotomy in China's economy. We've got a very, very strong export performance and very weak domestic activity. I think for FX, our view is still a gradual yuan appreciation. But actually, just in recent days, we look at the fixing, and it's been very close to the market. It seems that the PBOC is fairly comfortable with current levels of dollar CNY here. But further out, we would expect some outperformance, gradual appreciation of the yuan. But as long as exports remain robust, of course, if exports start to falter, we could see a bias for renewed weakness in the yuan. But we're not there yet. The big question is domestic growth. What is China going to do? And there's no real sign yet of any additional stimulus in the pipeline on the domestic activity front, especially given the weakness in the housing market and softer consumption.
Yeah, I think we're looking ahead to the Politburo meeting, perhaps potentially as something that could give us something to talk about. Mitul, fantastic, as always. Thank you so much. Mitul Kotecha there, head of FX at EM Macro Strategy Asia at Barclays. A look at equity markets right now. The KOSDAQ in focus, down 6-7%. To the left side of your screen is an ongoing briefing out of the BOK currently. Hang Seng Tech Index, yeah, let's talk about this next. 3% to the upside. Lots more ahead. This is Bloomberg. Okay, there is a rally that's taking place, a strong one at that, in terms of market breadth. Most are actually up on the tech space in Hong Kong. Volumes are also coming in quite heavy as we speak. We're about, let's call it 15, 16, 17% heavier than usual for this time of the session on the Hang Seng Tech Index. It's really coming from a lot of fronts. There's the EV space, there's Apple suppliers, and a lot of pillars to this rally today.
I think Apple intelligence in China certainly is what's lifting a lot of some of these big names, right? Particularly when it comes to Baba, particularly when it comes to Baidu here this morning, which have named as sort of partners in this sort of launch, I guess you could say, right, where the regulators gave the green light to Apple to finally really launch its Apple intelligence there in the country. So certainly what it could mean for Baba is certainly quite interesting. They seem to be seen as the role of a gatekeeper of sorts here, but certainly could be a good catalyst for not just the Apple stock, but really the Apple supply chain here. And really does it level the AI playing field in China when it comes to Apple as well. So there you go. 4% gains for Baba, Baidu, Luxshare, AAC Tech. These are some of the Apple suppliers as well, are all rallying on that news. We can't forget about XPeng as well. That journal report that they're ready to launch these robots, right?
Yep.
How many, really? 1,000 units per month.
They're looking to produce by the end of this year, more than 1,000 units per month. It is actually the biggest percentage gain on the Hang Seng Tech Index today. 7.5%. That tracks, of course, the big jump that we had also in ADRs overnight. We'll talk more about some of these movers in a moment. But yes, why don't we talk about Iran?
Yeah, we haven't talked about it all morning, really. The U.S. Central Command says it completed a second wave of attacks on Iran on Wednesday, hitting missile storage and launch sites during a 90-minute operation. Now, President Trump has pledged to intensify the bombardment until Tehran stops attacking ships in the Strait of Hormuz.
Let's bring in John Herskovitz, our East Asia government editor, with us right now to talk us through what we know, John, about the latest strikes. It seems like a daily exercise now. And how do they then fit into the overall conflict? Where are we currently?
Yeah, as you mentioned before, we had that one strike on the missile storage and launch facility, and U.S. Central Command said that it conducted a fifth day of attacks around the Strait of Hormuz, designed to degrade Iran's ability to harm shipping in the waterway. So that's the fifth straight day that those attacks have gone on, and we had the extra one for the missile facility. On top of this, the U.S. blockade has been in effect for about a day now. So we have that extra layer of military vessels in the strait, making it more difficult for shipping. So the attacks are going on. Iran has gone after U.S. bases in the region. So this has been what we've seen for a lot of the past week. There hasn't been anything escalatory beyond this. We're not seeing wider strikes in Iran, but this is where we are now with the attacks.
What are the risks then moving forward, John?
Yeah, it really is the escalation. If we see the U.S. going after more parts of Iran, if Trump is making good on his threats to go after civilian infrastructure, power plants, bridges, desalination facilities, and Iran goes after the infrastructure in its neighbors for energy production. Trump's made these threats before. They haven't followed through, but they're fresh threats. The worries are in the market. This has helped driving the oil prices up. So this is one of the biggest concerns, is the escalation. And if there's any off-ramp, it seems more and more difficult to find a way out of this.
John, thank you. John Herskovitz there, our Bloomberg East Asia government editor. Let's talk a little bit more about what we heard from trade, from the U.S. Trade Representative Jamieson Greer. He says that stability and ties with China remains a top priority. His comments come ahead of the expected visit of President Xi Jinping to the U.S. in September. Greer says the two sides will take stock of Beijing's commitments during the summit. He spoke exclusively to Bloomberg TV at the Aspen Security Forum just hours ago.
So China's compliance with the rare earth elements of our agreements, it's not perfect. I think everyone knows that. You can read that in the paper. That being said, we are getting a flow of rare earths. We don't have factories shutting down because they don't have it. But again, we really want to be in a position where we were, in 2024 and 2023 in President Trump's first term, where we had a regular flow of rare earths. We also know that the Chinese, they use rare earths for economic coercion. They did it in 2010 and 2011. They're doing it now, so it's not necessarily surprising. But we're continuing to have some flow, and where we have gaps, where we have problems, the Secretary of the Treasury and I, we work with our counterpart in China to try to loosen that flow up. Sometimes we're more successful than others. One important thing is we're moving forward in the U.S. on rare earth production. One of the things I'm doing on my trip out west here, I'm going to Utah to visit a facility where they've discovered rare earths in the Utah desert, and they're refining them and further manufacturing them at a facility in Utah, which is a great development for U.S. national and economic security.
You've got rare earths. There's huge pharmaceutical dependence as well. And I wonder how you're thinking about that, the way that you can kind of curb our reliance on Chinese pharmaceuticals and ingredients.
Yeah, we think about this a lot. This is really critical, because at the end of the day, if somehow you lose access to Chinese inputs, it can be a huge challenge for our own manufacturing base. And some people will say, well, what about India? Fine, but a lot of the inputs that India uses also come from China. One great thing that we're seeing as we try to encourage companies to reshore is we actually have commitments from 17 pharmaceutical companies, the largest and the most major pharmaceutical companies, not only to lower prices of medication here in the U.S. Pharmaceutical prices have gone down by 2.5%, but they've also agreed to reshore here and to manufacture here. And so we have companies like Eli Lilly and Novartis and others actually pouring concrete and superstructures going up in new facilities in North Carolina and Indiana and Southern California.
There's a long way to go until this meeting in September when the Chinese president comes to the United States. But let me ask you lastly, sort of how you're thinking about that. You were so integral to the conversations that took place in Beijing. What are you expecting, deliverables-wise, to come out of that meeting in Washington in a couple months?
Well, the number one deliverable we always have between President Trump and President Xi is to continue the stability of the relationship. Both of these leaders are very committed to having a strong and solid personal relationship. Now, that doesn't mean we don't have issues in the broader relationship. Obviously, we do. China is a big challenge for the U.S. in a lot of ways. But we want to make sure we're delivering stability. There's never been a situation where the U.S. side or even the Chinese side has gone out and said, everyone should expect a comprehensive agreement that resolves all issues. Like, no one's ever promised that, so that's not what we expect. We will have an opportunity to take stock of Chinese commitments with respect to purchases of soybeans and other agricultural products. We'll take stock on the rare earth issues we decided. So I think it'll be a moment for stock taking, confirming the relationship, making sure that China's complying with what it's agreed to do. That's really what we're looking forward to in this meeting.
Yeah, that was the exclusive conversation earlier on with our colleagues in the U.S., David Gura in Aspen, of course, that was Jamieson Greer, the U.S. trade representative. We'll take a short break, but we'll leave it a look at the Hang Seng Tech Index has continued to rally strong, this rotation into perhaps some of the underperforming parts of the broader equity market. Session highs on the index, very heavy volumes coming through. Lots more ahead, specifically on what's taking place in the markets here in Hong Kong. This is Bloomberg. All right, before we wrap up the shows today, just a glance at the Hang Seng Tech Index, which has really picked up, as you can see, in the last couple of minutes or so, and really can't, let's talk about heavy volumes too, just to mention that, but I can't wait for the show to be over. I am struggling. I am struggling, like a lot of people are. I have barely any sleep. I think it's
I wonder why.
Same reason why most people are struggling.
Yeah,
today.
I think everyone's struggling after trying to watch the Argentina-England match. Yeah. I think a lot of our guests this morning have all been just a bit somber.
Yeah, they tried to stay bullish on markets, but you could really sense the defeats.
Yes, especially if you watch the last half of that match, right, where it seems really that England could have been able to really win this, but then I guess Argentina came back in the last few minutes. Yeah,
it was. I mean, they've done this
before during this entire World Cup.
World Cup, right?
Yeah.
They've struggled up until the last 10 minutes just to make things exciting.
Yeah,
and England scored first, and then in the last 10 minutes they came back, and England parked the bus, stayed back, and just baited them to come, and they came.
A lot of controversy around the substitutions and really playing defense, right, for England during that back half. It's going to be interesting, right? Okay, so that means the final, Spain and Argentina.
Yeah. And
it's going to be another reunion of sorts, really. I love that. Everyone's bringing that viral picture of
back from way back,
Messi
right?
and Lamine, when he was a 5-month-old, and there's some photo shoot for Barcelona back in the day, and now these two are going to be playing in the World Cup final next week.
It's going to be in some ways, it obviously depends who wins, right? A passing of the torch, really, from the old Barcelona
to the new Barcelona.
To the new Barcelona. But yes, so I think to anyone who predicted that England would be facing France at the World Cup, I mean, you're still going to get your prediction, right? It's not just to win. It's going to be for third place. But if it helps any of the bulls out there, the pound is actually the best performing G10 currency.
Okay.
And I think, what are FTSE futures doing? Yeah, any consolation, right?
Can we show
what FTSE futures are doing? The most active contract. Let's have a look at that, given, of course, the backdrop of this. England is coming home. There we go. There we go. We're a little bit lower in FTSE futures.
Okay. A little bit of, yes, somberness. Yes, hopefully everyone can get some rest, at least later today.
I'm badging out soon.
What's getting a bit more love, though, is really what we've been seeing. HSTECH finally getting that love back here. There's a bit of AI rotation that's going on here, given these high-flying memory shares in Korea continue to be quite volatile. So you are seeing people picking up on the valuation and maybe saying, look, maybe it's time to look at a little bit more on the likes of Alibaba, Baidu, the Apple news, right? Apple intelligence in China certainly is lifting, not just those two, but also the Apple supply chain.
Yep, and look at the other hardware stories on your screen. ZTE is a very good example of that on the back of this news, of course, and that report out of Jamieson. And speaking of hardware, the big ones coming up across the Asia Pacific in a couple of hours. TSMC is set to report earnings. Stay tuned for that. Currently unchanged on this stock. That's it from us here today on the China Show. We have lots more underway, of course, with Insights, and Selena Amin is coming up next. We'll see you all tomorrow.